It's a beautiful morning from this part of the world. Good morning, ladies and gentlemen. And how are you doing today? Let's quickly confirm that we are on the same page here. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this session started. So I want to see some confirmations in the comment section. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so we can get this started. So I'm loading up my chat right now to see what we have here. Okay, 2728, good morning. Good morning, 963. All right, Carrie, good morning. I see you. Thank you for that confirmation. Well, let's take this as a confirmation that we are good to go. So I'm excited to welcome you to yet another promising session on the Extra and Speed Live. My name is Sharif Daramola, and in the next 1 hour, I will be your anchor where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, we are going to be reviewing all the pairs we have been monitoring since the beginning of the week. As we edge closer to the end of the week, we are going to be looking at how well these pairs are doing so far, after which we are going to be deliberating, reviewing, and deciding on what our next line of action will be. So my advice is that you stay tuned in so that you don't miss out on any of these ideas I will be dishing out during the course of this session. So with that being said, let's dive in to the market and see what is going on right now. Well, before we go into the details of the chart, we want to quickly look at the economic calendar because we have a major macroeconomic event that we are going to be looking forward to today, and that is the Gross Domestic Product Index, which will be published by the US Bureau of Economic Analysis. So this is going to be coming up in 2 hours from now, I guess, 2 hours from now. So definitely we have been seeing traces in the market that reflects the anticipation of majority in this market towards this event, as we have been witnessing a huge consolidation phase in the last 48 hours on all of the major pairs that we have been monitoring since the beginning of the week. And prior to this event or post this event, we are likely going to be seeing a massive move that will either move in either direction. So we are going to be positioning ourselves very well during the course of this session. So my advice is that you stay tuned in so that you can see how we are going to be positioning ourselves to take advantage of those moves when they finally happen. So the first commodity we are going to be looking at today is the US oil as usual. And if you have been part of us since the beginning of this week, you will definitely be in profit on the US oil, as right now we are very much in profit with multiple entries. I think we have 1, 2, 3, 4, 5, and if possibly 6 positions running on the US oil right now. And if we look at those who took advantage of this move right from the beginning of this week, definitely you will currently be running with over 450 pips moves. And in addition to all these other multiple entries, definitely you'll be close to about 2,000, over 2,000 pips in profit right now. So congratulations to those who have taken advantage of that move. Well, yesterday we had a situation that we were looking out to had more position at the breakout of the $77.50 level that was around this area yesterday, where we said if price, I told you that you should hold on. That is, those who missed out on all these opportunities we took advantage of at the beginning of the week. So for those who had missed out on this one, I told you yesterday that let's remain patient and wait out for a breakout of the $77.50 level, where we are going to be looking out for buying pressure right above that structure so that we can take advantage of that opportunity. And this is exactly what happened here during the New York session yesterday. As we can see, we saw a lot of buying pressure around that area following the breakout of that structure here during the New York session. In fact, we saw buy pressure above the $77.50 level, which lasted for about 5 to 6 hours before that move started to the upside. And if you are taking advantage of this move right above the $77.50 level yesterday, you will definitely be in profit of about over 200 pips in profit. Kudos to you if you are taking advantage of that move. So during the early hours of today, we saw another opportunity which I shared on my public platform that we're going to be looking out for another breakout of the $78.30 level, followed by buying pressure above that structure so that we can add one more position to that trade. And this is exactly what happened this morning. We saw the breakout of the $78.30 level. Price action came back to do a retest coupled with buy pressure above that structure, hereby confirming us to join the rally to the upside. So if you are taking that one as well, kudos to you, as you will currently be running with over 120 pips in profit right now. So our take profit target, personally, I place my take profit target at the $80 mark here, which definitely, if it is a TP target, I think I'm going to be good for today. But remember, we had a profit target zone between this $80 mark and the $84 area. We had a huge profit target zone, so there is a likelihood that price might come back into that $83 level, where we are going to be patient enough to see how price action is going to relate with that structure. And if we scale up a little bit into the 4 hours time frame, you will see how important the $83 level has been for us. And you can see what we have here on the 4 hours time frame. At the beginning of the week, we were able to identify that $83 level, which has been a strong niche for sellers since the breakdown of that structure happened here during the mid-month of November. Since the breakdown happened then, we have been witnessing the rejection of that level. So there is a likelihood that price might come into the structure here again. Then price might go through some consolidation phase around that area, which might likely transition into either a reversal pattern to incite a wave of bearish momentum to the downside, or we could be having a trend continuation pattern that could lead to a final breakout of the $83 level, coupled with buy pressure right above or around the structure to incite another wave of bullish momentum. So if you had placed your take profit target around the $80 level, it's okay. But if you really want to maximize this profit here, I will suggest that our last two entries here, that is the last two positions we opened between Wednesday and between Tuesday and Wednesday, we can actually extend that TP accordingly to somewhere around that area, and let's move our stop loss to lock in some profit at this particular point in time. So where will our stop loss be right now based on the current structure? Well, if we scale back down to the 1 hour time frame, I will be suggesting that we place our stop loss right around the $78.50 level, and let's give room for price action to breathe in order to see if price will continue to the upside, or we are going to be having a reversal to the downside. So move your stop loss accordingly, lock in some profit on all the buy position around the $78.50 level, and let's see how price action is going to play out in the next couple of hours. Well, for those who had missed out on this opportunity, well, let's see if the market is going to be presenting us with another chance to actually add more position or join this potential rally to the upside. In order to have a better look into this, I will be suggesting that we scale up to the daily time frame. Let's see what is really happening from an holistic point of view and see if we actually have another chance to join that potential rally to the upside. So in that regard, I will be scaling up to the daily time frame here, and let's have a look at what is really going on from an holistic point of view. Well, on the daily time frame here, I shared with you how I refreshed our memory on how we have been on a long-term bullish momentum here on the US oil, as price action has continued to find higher highs and higher lows since the year 2020. And as a result of that, we had this bullish trend line figure out. The trend line you can see on your screen with the green color has been guiding bullish momentum in the last 2 years until price action finally broke down the structure during the month of November. So we saw the breakdown of that bullish trend line here, which also shares a confluence with that very important key level we have been using as our trading guide in the last couple of months now, that $85 level. So we saw the breakdown of that structure. And if you look at what has been happening here in the last couple of months, we can see that price has been within a consolidation phase between the $93.50 level here and the $77, $78 area, which has been a strong demand niche for participants since the month of September. Though we had the breakdown of that demand zone here last month to signal a possible bearish momentum. However, when price tested the $70 level, we begin to see buy pressure start coming in, which might likely turn out to be a reversal pattern. That was our expectation at the beginning of the week, that this might likely turn out to be a reversal pattern in the form of a double bottom structure, where we are going to be identifying the neckline area, which we actually did yesterday at around the 77, is it the $78 area, where we said if a breakout of the $78 level happens yesterday, then we want to be comfortable in our buy position. And this is exactly what happened in the last 24 hours here. We finally saw the breakout of the $78 level, which might likely incite a bullish move that might likely come back to do a retest of the structure that was broken during the month of November. Remember, we had a structure broken in the month of November, breaking down the bullish trend line, and as well breaking down the $85 level. So there is a likelihood that price might come back into the structure here, where we are going to be looking out to see how price action relate to that structure. Probably we are going to be having another wave of bearish momentum to the downside, or we could have price break above the bullish trend line one more time, buy pressure right above the structure to incite another wave of bullish momentum. So this is what we are going to be looking at if price gets to that level. But since we are still around the neckline area, let's decide if what our next line of action is going to be. Are we going to be expecting price to continue to the upside in such a way that it comes back into the structure that was broken last month to incite another wave? So this is what we are going to be looking at for today. So we are at a critical point right now, as price action is right around close to the $80 area, which I told you my take profit target is. So let's see how far this is going to go. So we are around the $79.50 level. So we have about 50 cents left for price to actually hit our take profit target. And I told you that we could extend our TP target to somewhere around the $83, $84, or $85 area, which shares a confluence with the structure that was broken last month. So we might likely see price come into the structure. So how far this move is going to go is what we don't know at this particular point in time. But if we are going to be projecting how far this retracement phase is going to go, using the previous impulse leg that we have here, that is, whenever we have an impulse leg, we always expect that price action will definitely go through some retracement phase into our golden zone area, probably in anticipation of another wave of bearish momentum. So if we take this impulsive move that started from the $93.50 level into consideration here, using our Fibonacci retracement tool, running it through that impulse leg, and then we should definitely be identifying somewhere between the 50 and the 78.6 area, which will be serving as our golden zone area. So we should be having this area as a TP target zone for sellers, TP target for sellers. Let me label this area for the sake of clarity, and this is a possible sell zone, sorry, TP target for buyers rather, excuse me there. So TP target for buyers, then we should be having that area as a potential sell zone, just in case we start seeing reversal pattern around that potential sell zone. Okay, let me call it a sell window, and I will just place this right inside of this box here. So we have something like this. Let's give this a yellow color for the sake of visibility. All right, so here we go. So we should be looking at somewhere around here for our TP target from a long-term perspective. Well, I don't know if that will be achieved this week. Let's see how price action will go. But if market gives us an opportunity on our lower time frame where we start seeing a breakout of structure by pressure around that area, then we could probably be thinking of adding more position with the hopes that price will get into this area where I said we could either be looking out for reversal pattern to same price crashing to the downside, or probably a trend continuation pattern around here to incite another wave of bullish momentum. So let's scale down to the lower time frame. So we are at the $80 mark area. So let's see what is really going on around there on the 1 hour time frame. So right now we are back to the 1 hour time frame where we were. And this is where we are right now. We are at the $80 mark. So let's make quickly identify that $80 level and let's use that as a yardstick for trading activities for today. So let me replicate the $80 level here. We should be having, okay, so we have the $80 mark around here. Let's label this area for the sake of clarity. So we have this place labeled the $80 level. $80 level. Okay, so we have it here. So this is where I told you my TP target is for all the position I took on Monday and Tuesday. And we are going to be, and if we look at the past here, let me give this a blue colors to differentiate it from our previous structure. So if we look into as far as the mid-month of November, we can see how that level also has been a major determinant of price action. Before we saw the breakdown of that structure, we saw a retest here. We saw the breakout again here on the last day of the month of November. Then we saw the breakdown of the structure during the first week of this month. Then price is actually edging close to that level. So one thing we are going to be doing now, for those who have actually missed out on any of these opportunities we took advantage of since the beginning of this week, I will be suggesting that we'll remain patient and wait out for price action to test the $80 level. And let's see how price action is going to relate to that structure. So if price gets into the structure here and we start seeing selling pressure, probably a double top structure, which is a strong reversal pattern, we scale down to our lower time frame and we continue to see sell pressure right below the $80 level, then we might likely be getting ready to join the sell momentum to the downside in such a way that price might come back to respect this bullish trend line that has been holding by pressure since the beginning of last week. Remember, we identified this bullish trend line has been holding by pressure since the beginning of last week's trading session. So there is a likelihood that if selling pressure comes in around the $80 level here, we could see a move that will come into the structure. That is this bullish trend line, anticipation of another wave of bullish momentum. However, if price breaks down that trend line, then we might likely be seeing this move as a retracement phase if selling pressure continues below that level back into the resistant level of that descending channel we identified on the 4 hours time frame. Let me quickly show you that so that you can see what I'm talking about here. So we had the resistant level of descending channel here on the 4 hours time frame. So there is a likelihood that price might come back to do a retest of that structure. As you can see here, we had the breakout of the resistant level of the descending channel there. Price might come back to retest that structure to incite another wave of bullish momentum. And if instead we have, instead of seeing selling pressure around the $80 level, and we start seeing what we call a breakout of that structure, followed by buying pressure right above or around the $80 level, then this might likely give us an opportunity to add more position to our existing trade, with a TP target sitting between the $83 level and the $85 area at this point in time. So this is what we are going to be looking forward to during the New York session today. And remember, we have a major macroeconomic event coming up in 2 hours from now, which is definitely going to be bringing some liquidity into this market to push price action in whatever direction it wants to go. So let's prepare ourselves, position ourselves in such a way that we are able to catch that move when it finally happens. So I'll be taking the next 10 to 15 seconds to read through the chart and see if there are any questions regarding what I've just explained here before we move on to the next pair. So let's quickly run through the charts and see what we have here. Okay, Daniel, good morning to you. Glad to have you around. Okay, I am not sure what Aguila Tutu is talking about here. I would appreciate if you can rephrase your statement for better understanding. Okay, glad to meet you too. Innocent Babe, good morning to you. It's okay, Innocent Babe. I'm glad you're around anyways. Hope you're profitable this week. Okay, man, 531. Okay, all right. All right, in the absence of no questions, good morning, Innocent Babe. All right, in the absence of no questions, I would assume that we are all on the same page on the US oil. So I will be moving on to the next option, which is the US tech. And on the US tech, we had a little dilemma that happened during the New York session yesterday before we were able to catch that bullish momentum to the upside. So where were we during the live session yesterday? We were around the $11,125 level here. And remember, we identified that $11,125 level yesterday as we were supposed to use that level as a guide for our trading activity. And one thing I stated there yesterday was that if a breakdown retest of that structure happens and we start seeing selling pressure below the $11,125 level, we want to be looking out for selling opportunities. However, if a breakout of the structure happens followed by buying pressure right above the structure, we want to be looking out for buying opportunities. And remember, we took advantage of a sell momentum at the beginning of the week. So we are very profitable on the US tech so far. We had about 270, then another 200 thereabout. Before we also took advantage of some sell position here on Wednesday, though we were taken out of that position. And on Tuesday as well, we took some buy position here. And this was when I told you yesterday that we should be moving our stop loss accordingly to lock in some profit. But unfortunately for us, we were taken out of that position with some little profit there. And what we saw yesterday, though, price broke down that structure. And at this particular point in time, there was a little bit of indecision happening around that area. But as soon as price broke above the $11,125 level, followed by buying pressure on our lower time frame right around that structure, it was a very good situation for us to buy the US tech. And I hope you actually took advantage of this opportunity yesterday. And if you did, kudos to you. Congrats, as you will currently be running with about 100 pips in profit right now. So if you actually took advantage of that opportunity, the next thing we want to be doing right now is to lock in some profit, move our stop loss accordingly. And I think below the 11,190 area seems most appropriate to lock in some profit at this particular point in time, as we want to wait out to see how price action will continue to relate to the zone right above the $11,200 level. Now, if we look at what has been happening here in the last 12 to 16 hours here, the 11,275 has been holding selling pressure. As soon as price gets into that level, we have been witnessing selling pressure from that area, negating or buying attempt to break out of that structure. And if we look closely, we can see that this is where price started this week. We had a resistance point at the beginning of this week at 11,275 with a support level at 11,200. So price is right back at where it started this week. So going into the New York session today, there are two possible scenarios we shall be looking forward to as price action is presently caught within a consolidation phase, emphasizing the indecision in this market. And there is a tendency that participants are waiting for the macroeconomic event coming up today in order to make a decision on the US tech. So what we are going to be doing here, move our stop loss accordingly if you're already in this trade, and then let's wait out to see how price action is going to react to the structure that we have here between the 11,275 and the 11,200. And what are we going to be looking out for during the New York session today? Well, the first scenario we are going to be looking out for is that if the Well, this turned out to be a trend continuation to the upside. The only way we can know if it's going to be a trend continuation to the upside is only if price breaks out of the 11,275 with an engulfing candle. Then we start looking out for buy pressure. We scale down to our lower time frame. Look out for buy pressure right above that structure. Then we could actually add more position to our existing trade. And if you look closely at that 11,275, it also shares a confluence with a bullish trend line that has been holding buy pressure since the beginning of this week. You can see we had this bullish trend line figured out at the beginning of the week, and right now price is around that area. So if a breakout of the 11,275 happens, it's a sign that buyers are still very much in this market. So we continue to look out for buy pressure above that level, then we could actually add more position to our existing trade. However, if price breaks down the $11,200 level, very important key level which we identified on the daily time frame. I will be showing you that in a moment so that we can have a better understanding into how important the $11,200 is. So if a breakdown of that structure happens followed by selling pressure below that level, then we want to be getting ready to sell the US tech. And if you look at what we have here, remember we have been on a long-term bearish momentum here, a bearish momentum which has been holding for the last couple of weeks now. So if a breakdown of that $11,200 level happens followed by selling pressure right below that structure, then we want to be thinking of selling the US tech. But before I go further into the details here, I want to share with you on the daily time frame how important we said the $11,200 level is here, which has been a major determinant of our price, our trading activity for this week. So scaling back up into the daily time frame here, let's quickly look at what is happening on the daily time frame. So here we are on the daily time frame, and the first thing we observed at the beginning of the week is the fact that price action has been on a long-term bearish momentum, and as a result of this we were able to connect the series of lower highs here to give us that bearish trend line you can see on your screen with the black color, and this has been respected by the sellers since the beginning of the year. However, things got a little bit interesting as soon as price got into the $11,000 level, and that was in the month of June. And as soon as price got into the structure here, we begin to see buy pressure coming in from that level, negating all attempt by the sellers to break down that structure. So we saw that attempt here come in the month of June, and the same thing also happened here in the month of September, stroke the early days of the month of October. Now, with buy pressure coming in here at the later part of the month of September, we can see here that the buy pressure wasn't as strong enough. As you can see here, as soon as price tested the $11,700 mark, we begin to see selling pressure from that area, further emphasizing that sellers are still very, very strong in this market. Now, we had another demand zone as the sellers were so strong that it shifted the demand zone further to the downside. So we had a new demand zone at the $10,500 level. Now, buyers began to gain some momentum later on in the month of November as we saw this huge engulfing candle that broke out of that demand zone, leading to a final breakout of the $11,700 level. The first time in 2 months, we saw the breakout of that structure. But one thing interesting happened here. As soon as the breakout of the $11,700 level, remember, a level which has been holding selling niche in this market, we saw our price was caught within a huge consolidation phase that lasted close to about 6 to 7 months. And that consolidation phase was within the 12,050 and the $11,500 level to emphasize the indecision in this market, as participants were not sure if this bullish momentum here will hold, or probably it's going to turn out to be a false breakout that might lead into shaking out the buyers, and then sellers come in to push price further to the downside. And in fact, we saw a situation here last week which we took advantage of. We took advantage of buy opportunities right above the 11,500, and this led to a sharp rejection of the 12,050, a level which also shares a confluence with that major bearish trend line we identified at the beginning of the week. And with a final breakdown of the $11,500 level, a level which has been holding by pressure for 5 to 6 weeks here. And that was a good signal that sellers are likely going to be coming in at this particular point in time. And from a technical standpoint, whenever we have a breakdown of a structure like that, we expect that one point in time price is likely going to come back, do a retest of that structure. It could be the 11,500 or probably the 11,700, where we shall be looking out for selling pressure to join the trend continuation to the downside. So we are at a very critical point in the market right now, as price action is around that $11,200 level, which I showed you on the 1 hour time frame, and I said I needed to show you how important that structure is. And now if we go to as far back as the month of September, we saw how this level at one point was holding by pressure before the breakdown happens here. So we can see how that level has been a major determinant of price action. So we saw the breakout of this level here during the first week of the month of November, and price appears to have come back to do a retest of that structure. And since price came back into that $11,200, $11,000 level, we have been witnessing a consolidation phase here. So there is a likelihood that buy pressure here will continue in such a way that it brings price back into the 11,500 or the $11,700 area to retest the structure, hereby inciting another wave of bearish momentum. So at this point in time, we want to see how price action is relating to the $11,200 level on our lower time frame in order to make a decision for today. So what we are going to be looking out for on the 1 hour time frame is if we start seeing buy pressure again right above the $11,200 level here, we want to be adding more position to our existing trade. Remember, we have moved our stop loss accordingly on the buy position we took advantage of yesterday to protect our position against sudden pullback. Remember, in the last 2-3 weeks now, we have been witnessing selling pressure. So there is a likelihood that sellers might likely come in. So we want to make sure that we mitigate ourselves against such risk. Move your stop loss accordingly. Lock in your profit, and let's wait out to see what happens around the 11,200. So if we see buy pressure above that level, we want to be getting ready to add more position to our existing trade with a TP target between the 11,500 and the $11,700 level. However, during the New York session today, if price breaks down the 11,200, followed by selling pressure below the structure on our lower time frame, then we want to be getting ready to join that decline to the downside. Remember, we are on a bearish momentum here, and we had this impulsive move since last week, and this could turn out to be a reversal pattern that might be a trend continuation pattern that might incite a trend continuation to the downside. So we want to get ourselves prepared so that we can be part of that move when it finally happened. So let's go back to the 1 hour time frame, and let's draw out a structure, draw out parameters that we shall be using to guide our trading activities for today. So going back to the 1 hour time frame now, after understanding what is really going on the higher time frame, now we are back to the 1 hour time frame. And remember that since at the beginning of the week, we were able to identify this trend line, which has been holding selling pressure since the later part of last week. So we had this trend line, and it was finally broken yesterday, an area which also shares a confluence with that bullish trend line here. So we saw the breakout of that structure. And whenever we have a breakout of a structure like that, there is a tendency that price might likely come back, do a retest of that trend line, and then if we start seeing buy pressure again from this level, we might want to be joining that rally to the upside. So for me on the US tech here, what we are going to be looking out for, I want you to listen to this attentively. It's very simple. So I want us to listen attentively so that we can get the scope about this current structure that we have here. So now, if price breaks down the $11,200 level here, followed by selling pressure, we want to sell, then, as we sell this position, it's going to take us out of the current buy position we are in right now. And then as we sell the position below the 11,200 at the site of selling pressure on our 1 hour time frame, we continue the momentum to the downside. But as soon as price tests the $11,125 level, kindly move your stop loss for your sell position to either break even or lock in some profit. The reason why that is this. Remember, we said price broke out of this trend line here. And from a technical standpoint, there is a likelihood that price might come back to do a retest of that structure, which also shares a confluence with that $11,125 level. So what I'm saying here is we might likely have buy pressure here that will incite another wave of bullish momentum. So if we see buy pressure around this area, probably a double bottom structure, for example, just for the case of this video, if we see a double bottom structure here, something like this, and a breakout of the double bottom structure of the neckline of the double bottom structure on our lower time frame, we want to be joining that bullish momentum. So price will take us out of the sell position as we enjoy another wave of bullish momentum here. However, if price continues to the downside, let's remember we have moved our stop loss to lock in the sell position here, and price breaks down the bearish trend line here, which has been holding selling pressure since the beginning of the week, then retest of structure followed by selling pressure, then we want to be adding more position to our sell trade on the US tech. So this is how we are going to be trading the US tech for today. So remember, move your stop loss accordingly for this current buy position, lock in some profit here, and if we have a breakdown of the 11,200, we want to be getting ready to join the sell momentum with a catch at 11,125, where we said we are going to be moving our stop loss accordingly and wait out to see how price action will relate to that structure in order to make a decision of either adding more position to our sell position or joining a buy momentum when we start seeing buy pressure around that area. Now, if price does not go that far at all, that is, if price does not drop below the 11,200 and instead it breaks out of the $11,275 level, and with buy pressure above the structure, then we want to be getting ready to add more position to our existing trade. It's a very quite simple setup here. So I would advise you smudge my screen so that you can use it as a reference point when you're about making your individual decision during the New York session today. So if you have any questions whatsoever, probably you don't understand any aspect of what I just explained, feel free to drop your inquiries in the comment section, and I will be taking my time to shed more light on this. So I will be looking at the comment section from time to time while I move on to the next pair, so that we don't get caught up with the time frame. All right. So right now we are going to be treating the USDJPY. So like I said earlier at the beginning of the session, that most of the major pairs we have been monitoring has been caught within a consolidation phase in the last 48 hours. And this can be connected to the macroeconomic event coming up today, as there is not much liquidity in the market. So the big fishes are waiting for the major event, probably close to the major event or a little bit after the major event, to bring some liquidity into the market to push price action in whatever direction it's going to go. And this will be dependent on whatever the outcome of the GDP is going to be. So from a technical standpoint right now, on the 1 hour time frame, we are at a very simple setup that we have here. That is, we have a flat channel as price action has been caught within the 132.350 level area here and the 131.600 level area here in the last 48 hours, further emphasizing the indecision in this market. Now, from a technical standpoint, when we have such a structure like this, we have no other choice than to remain very patient to wait out for a signal to happen, and the signal will either happen in the form of either a breakout of the structure to the upside to give us buying opportunities to join the reversal pattern to the upside, or we could be having a breakdown of this channel below the 131.600 with selling pressure below the structure on our lower time frame to join that decline to the downside. So this is what we are going to be looking forward to on the USDJPY for today. So I would advise us to remain patient here and wait out for the structure to mature before we want to be taking advantage of any trading position here on the US oil. So at this point in time, we have the position is open. It could either go bullish and it could either go bullish or bearish at this particular point in time. So let's wait out for either a breakout of the 132.350 or the breakdown of the 131.600 to take advantage of any bullish or bearish momentum at this point. And one thing I would like to state here is that whenever we have this kind of huge consolidation phase like this, when the move finally breaks out of that channel, it's always going to be massive. So once we position ourselves very well, we can be able to take advantage of that move. So your sell stop or buy stop order will likely be very, very useful in this kind of scenario right now. So before I close on the USDJPY, let's quickly look at what is going on the daily time frame so that we can tend towards a bias that might likely happen during the New York session today, or prior to the event, or after the macroeconomic event. So on the daily time frame here, we like I told you yesterday, we were able to identify this structure here. We have this long-term bullish momentum on the USDJPY, which has lasted for close to a year now, and you can see that with the bullish trend line here connecting the series of higher lows. Then in the month of August, we had this reversal pattern in the form of a double bottom structure, which broke out of the neckline of that reversal pattern here at the 135 Japanese yen level, and it actually took over 3 to 4 months before price action came back to do a retest of that structure. And we had a consolidation phase here before price broke down that 135 Japanese yen level, and you can see what we have here. Price is back into the 131.00 area. Now look at what is very critical about that structure. In the month of August, the 131.00 level was holding buy pressure. It was a demand zone for participants in this market, and right now price is back within the 131.00 level, further emphasizing the strength of the buyers at this particular point in time. As you can see, buy pressure coming in right around that area. As soon as the engulfing candle hit that structure, we have been witnessing buy pressure around that area in the last 48 hours, and this was reflected on our lower time frame as a huge consolidation phase around this area. So like I said, on the 1 hour time frame, we are going to be patient enough here to see if we are going to be seeing a breakout of that channel that might likely bring price back into the $135 Japanese yen level, a level which was broken here on Monday, where selling pressure could likely incite another wave of bearish momentum, or we could have a breakout to incite a bullish momentum back into the bullish trend line that was broken here to incite another wave of bearish momentum to the downside. So we are going to be patient enough at this current structure to see if we're going to be having a breakout to the upside. That means the demand zone is still strong to push price to the upside. But if price breaks down the structure, then we might likely be seeing price breaking down that demand zone to the downside. So we want to be getting ourselves prepared to catch that move. So back to our 1 hour time frame. Hold on a second. So back to our 1 hour time frame right now. We just remain patient here and wait out for the breakout of that channel. So let's mark this channel out on our chart between the 132.350 and the 131.600 area, looking out for either a breakdown or a breakout of that channel to give us a clue of where price action might be heading during the New York session today. So if you have questions, please feel free to drop your inquiries in the comment section while I move on to the next pair. So the next pair we are going to be looking at today is the XAUUSD. And in a matter of fact, the XAUUSD has been a profitable trade for us since the beginning of this week. So we had a sell position running at the beginning of the week where we took advantage of this move right here, which gave us about 1,000 pips in profit before we started seeing buy pressure coming in right above the $1,785 level on Tuesday morning. Though I missed this move, I told you I missed this move, but was lucky enough to join this move right above the 1,795. So during that live session on Monday, during our live session on Tuesday, we talked about taking advantage of this move if price breaks out of the 1,795, and this is exactly what happened. And so if you have been part of this trading journey since Tuesday morning, well, you will currently be running with over 2,000, close to 2,000 pips in profit right now. We also added more position to this trade when we saw price come back to retest our potential buy zone here, and we also added another one at the breakout of the 1,808. So since then, we are still very profitable here. And during the live session yesterday, I told you to move your stop loss right around the $1,811,050 level, which are still going to be holding for today, and price is here to take us out of our current positions on the XAUUSD. And like I said earlier, we have been witnessing a huge consolidation phase in the last 48 hours here. And the same thing is happening here on the XAUUSD. And this is going to be connected to the anticipation of the major event coming up today, where participants in this market are waiting out to see what's really going to be happening, what data is going to be released today to decipher if we are going to be going bullish or bearish. So we have the resistance level at the $1,821 level, and we have the support level at around the $1,814 area. So it's quite a huge consolidation phase here. So we are going to be patient here to wait out for the structure to mature before joining adding any position here or getting ready to sell at this particular point in time. So like I said, if we have such channel like this, we always want to remain patient to wait out for either a breakout to give us an opportunity to add more position to our existing trade here, or we could be getting ready to join a decline if a breakdown of that structure happens to the downside. So if a breakdown happens, we want to be having our take profit target between the 1,795 and the $1,790 level, and this might likely turn out to be a retracement of the previous impulse leg that we have here. Remember, we had this impulse leg that started this week at above the 1,785. Hot within a consolidation phase, we might be seeing a retracement into either the 1,795 or the $1,790 level before another wave of bullish momentum happens. So we want to prepare ourselves to take advantage of that. Remember, we have moved our stop loss accordingly, locked in some profit below the $1,811.50 level, and let's see what happens prior to the macroeconomic event or after it. So let's position ourselves for either a breakdown retest to join the decline to the downside, or a breakout retest to join the bullish momentum to the upside. So if we take a look at what is really going on the daily time frame here, we will be able to see things more clearly if we need to add more, extend our TP, or we should remain our TP where it is. Now, if we look at the daily time frame here, we have this very important key level at the $1,800 level, a level which has been a major determinant of price action since the beginning of this year. So we can see how that level has been holding by pressure at the beginning of the year here. So we saw between the month of December and March this year, that level was holding by pressure. The same thing happened here in the month of May by pressure coming in here, but it wasn't strong enough as sellers came in to negate all buying attempts, which led to a final breakdown of the $1,800 mark. And since then, we have been witnessing selling pressure below the $1,800 level to further emphasize the strength of the sellers at this point. Well, in the last couple of weeks now, we saw that price has come back into the $1,800 level, but what we saw here as soon as price got into the 1,800 was the fact that price has been caught within a consolidation phase, emphasizing the indecision right now, as participants are not sure if this is going to be pushing price to the upside, or we could be having a sell-off which will reflect as a retracement on the chart into somewhere around here before another wave of bullish momentum will happen. So it's a very dicey scenario we have here on the XAUUSD as the tussle for the $1,800 level continues between the buyers and the sellers at this point. Though we are a little bit above the 1,800, it could turn out to be a false one where price might likely break down the 1,800, retest to structure to same price going to the downside. But if we see trend continuation patterns around the $1,820 level on our lower time frame, which we've already started seeing that consolidation phase now in the last 48 hours around this area. So if a breakout of the channel happens to the upside, then we might be getting ready to join that bullish momentum, which I showed you on the 1 hour time frame. However, if this consolidation fit turns out to see price breaks down that structure, then we might likely be seeing another wave of bearish momentum. And one thing I would like you to know here is the fact that whenever we have this huge consolidation phase like this, whenever price breaks out of that structure, the move is always massive. So we want to position ourselves in such a way that we can take advantage of that move when it happens. So to make things easier, we have identified a channel on our lower time frame, that is the 1 hour time frame, which we shall be using as a yardstick for trading activities for today. So we already have that channel figured out between the $1,821 and the $1,814 level. So my advice is that let's position ourselves below the 1,814 for selling opportunities and position ourselves for buy opportunities right above the $1,821 level. So that is my view there on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. Now we are going to be closing the day with the EURUSD, which is one of the pairs we have been monitoring since the beginning of this week. And one thing we have here on the 1 hour time frame on the XAUUSD, you will agree with me that since the beginning of the week, we have been witnessing a very choppy situation here on the EURUSD as price action continues to oscillate between the 1.06450 level here and this $1.05850 level as a support level since the beginning of the week. So it's a quite choppy scenario, and this has a tendency of making you have an headache, but it's very simple to trade if we follow the rules of technical principles. Now we have a channel already, and we already have the buy position we took advantage of here on Tuesday. Remember, we bought the EURUSD around the 1.06100 level after identifying buying pressure continuing around that area. So we took advantage of that move, and we are still currently in that position right now. And if we look at the current structure we are in right now, we are still profitable, though the profit isn't that much. We have about 20 pips in profit right now, and I will continue to wait out to see how price action is going to react to the macroeconomic event coming up today. So what we are going to be looking forward to, as usual, whenever we have such structure, is to wait out for either a breakout or a breakdown of the structure to give us a signal of where price will likely be going to for today or before the end of this week. So we have a structure here for buying opportunity at the 1.06450. So if a breakout of that structure happens, at least a significant breakout, that is what we want to be looking out for. Taking out all the sell position around the 1.06450 level here, then we want to be comfortable that buyers are still very strong in this market. And if possible, we see buy pressure above the 1.06450 on our lower time frame, then we want to be adding more position to the buy position we are already in right now. However, if during the New York session today, price breaks down the 1.05850 level, followed by selling pressure below either the 1.05850 or the 1.0600 level on our lower time frame, then we want to be joining that decline to the downside. And remember, the 1.0600 level is the key level that we were using to guide our trading activity for this week. So at the beginning of the week, we identified the 1.0600 level, which we said shall be guiding our trading activity, that if price remains above that level, we want to be buying, want to remain comfortable in our buy position. And if price breaks down that structure, we want to be ready to sell the EURUSD. Now, let me quickly show you how important the 1.0600 level is on our daily time frame. So this is what we saw on the daily time frame at the beginning of this week. So we had the situation here on the daily time frame where we saw how price action has been on a long-term bearish momentum here. In fact, in the last 2 years, we have been witnessing selling pressure continue to take over this market. And as a result of this, we had this bearish trend line, which you can see on your screen as the black trend line. Now, price has been respecting that trend line, and not until the month of November this year, we saw the final breakout of that structure. a structure which also shares a confluence with the 1.03750, a level which has been a major determinant of price action. And since the breakdown of the structure happened here in the month of July, sellers has continued to take hold on this market. Now, with the breakout of both the 1.03750 and the breakout of the trend line, we can see price has been climbing up, though it's a little, there is a consolidation phase here. The bullish momentum isn't that strong, as you can see, as price continue to find higher highs. The distance between the low and the high continue to reduce at this point in time. And since the beginning of this month, that is December, we have been witnessing selling pressure right around the 1.07350 and the 1.0600 level. So this is where I was showing you on the 1 hour time frame, that is the 1.0600 level. So we saw how this level has been holding selling niche at one point this month. Then we saw the breakout of that structure. The price is back within this level right now, followed with the selling pressure here. I'm of the opinion that if price breaks down the 1.0600 level, this could turn out to be a huge sell-off that will reflect as a retracement into probably the trend line that was broken. Remember, we identified this bearish trend line that was broken during the month of November here. Price might likely come back to do a retest of that structure. And in fact, we have a confluence between that trend line and the bullish trend line that has been holding buy pressure since the month of November. So we might likely have price come back into the structure to incite another wave of bullish momentum. So for me on the EURUSD, things are looking a little bit bearish for me here. So we shall be waiting for price to break down the 1.0600 level to give us that leverage to join that decline to the downside. So to make things easy for us during the New York session today, so we have a structure already identified on the 1 hour time frame, which I've showed you earlier. So we shall be waiting out for price action to break out of this structure or breakdown of this channel for us to take advantage of any bullish or bearish momentum here. So this is the 1.0600 level here. So like I said, a breakdown selling pressure below the structure should be giving us that leverage to join that decline to the downside. So I'm of the opinion that selling pressure is still very strong in this market. So let's wait out to position ourselves in such a way that we can catch that move when it happens. However, if a breakout of this level happens, then we have no choice to look out for buy pressure above this level to join the rally to the upside. So I wish we get ourselves prepared, position ourselves in such a way that whenever this move happens, we want to be taking advantage of that move. And I hope we come back here tomorrow to celebrate this profitable position that we have here. So with that being said here, I would like to run through, do a quick recap of what we talked about today before I drop the curtain on this live session. So the first commodity we looked at today is the US oil. And in fact, on the US oil, we have been profitable since the beginning of the week. Remember, we took advantage of this buy position right around the $75 level, and we have been riding this bullish momentum all the way through as price action is edging close to the $80 level, which I told you my TP target for my initial position is at this particular point in time. So we said for those who had missed out on all of these opportunities we took advantage of during the week, I've told you that let's remain patient and see how price action is going to relate to the $80 level. I showed you how important the $80 level is on the daily time frame. We saw that level was holding buy pressure at one point in time before we saw the breakdown of that structure during the first day of this month. So what we are going to be looking out for is to see how price will relate to that structure. So if we sight a break, if we sight reversal patterns below that structure that is selling pressure below this level on our lower time frame, then we want to be getting ready to join the sell wave back into either the structure here or this level here in anticipation of another wave of bullish momentum. However, if price breaks out of the $80 level, followed by selling buying pressure right above the structure, we want to be adding more position to our existing trade. So that is my view here on the US oil. So for those who had missed out on this opportunity, Let's wait to see how price relates to the $80 level. Then we look out for either a breakout of that structure to buy the US oil, or we look out for reversal patterns with selling pressure below the $80 mark to look out for selling opportunities on the US oil. Then we went on to talk about the US tech today, and on the US tech, we are in a profitable trade here on the US tech as we took advantage of this buy opportunity yesterday right above the 11,125. And I told you that you should move your stop loss accordingly to protect your position. And I said somewhere below the $11,190 area, which is right below this very important structure at 11,200, to lock in some profit here. And let's see how price action is going to relate or react to the structure here between the $11,275 level and the $11,200 area. And I connected this consolidation phase to the anticipation of the macroeconomic event coming up today, which is likely going to be driving this price action massively. So let's get ourselves prepared. So what are we saying? What are we going to be looking out for during the New York session today? Well, we have two scenarios we are saying we are going to be looking out for. One is if price breaks out of the 11,275 with buy pressure above the structure, then we want to be looking out for buying opportunities to take advantage of this move on our lower time frame. However, if price breaks down the $11,200 level, taking us out of the current buy position, and then if we start seeing selling pressure below the structure, we want to be selling the US tech. Now, there is one catch here that I explained to you. I said as soon as we start seeing selling pressure below the 11,200 and we sell the US tech, as soon as price gets into the 11,125, a level which shares a confluence with the trend line, which has been holding selling pressure since the beginning of the week. Remember, we saw the breakout of that trend line here. There is a likelihood that price might come back to do a retest of the structure to incite another wave of bullish momentum. So what I said here is that if price gets into the 11,125, the sell position here, we should move our stop loss, lock in some profit, or move it to break even. Let's protect our position and watch out and see how price is going to relate to the 11,125. So if we start seeing buy pressure above the structure here, we want to be getting ready to join the rally at the breakout retest of the structure. Price takes us out of the sell position and boom, the bullish momentum goes in. However, if price breaks down the 11,125, coming back down below the bearish trend line here with selling pressure below the structure, then we want to be thinking of adding more position to our sell trade. So this is what we are going to be looking forward to on the US tech. Then we went on to talk about the USDJPY, where we've identified a simple setup here, which we shall be using to guide our trading activities for the week. And that is the flat channel that we have here between the 132.350 and the 131.600. So I told you that we should prepare ourselves for this move. This move is likely going to be massive. So a breakout of the 132.350 level here should be giving us an opportunity to buy at the site of buying pressure above that structure, and a breakdown of the 131.600 is going to be giving us a signal to sell the USDJPY. So please and please, let's get ourselves prepared for this move to happen when it finally comes in. But from my own point of view, looking at it from an instinctively point of view, I'm of the opinion that buyers is likely going to come in here, as we might likely see a reversal pattern that will break out of the 132.350 level to the upside. So that is where my inclination is on the USDJPY. But we want to keep our options open just in case if a breakdown happens, we have no choice but to get ready to join that decline to the downside. Then we went on to talk about the XAUUSD, and remember we have also been profitable on the XAUUSD as we took advantage of this buy position right above the 1,795 level. Until this moment, you will currently be running with a minimum of 2,000 pips. Remember, we have multiple entries here. We took advantage of this move here on Tuesday. We also added more position here later on Tuesday here. So we are very profitable on the XAUUSD, and we have moved our stop loss to somewhere around the $1,811.50 to lock in some profit here so that we don't get caught up in any pullback that might likely happen around this area. And like I said, we are in a huge consolidation phase right now between the 1,821 and the 1,814, and this is in anticipation of the major event coming up today. So we shall position ourselves in such a way that we can catch that move when it happens. So we are waiting for either a breakout of the structure to incite a bullish momentum, or a breakdown of the structure to incite a bearish move to the downside. So let's prepare ourselves. For me personally, I'm of the opinion that a breakdown of the 1,814 is likely going to happen, considering the sell pressure and the nature of this candle here around the 1,821, which is looking more of strength in the sellers at this particular point in time. But let's keep our options open. We have a channel already, so either a breakout of the channel or a breakdown of the channel will be giving us an opportunity to join that decline. Ensure your stop loss is moved accordingly. Please and please do move your stop loss, lock in some profit here, as we are in for a massive move coming in today. Now, we moved on to talk about the EURUSD, which is the last pair we talked about today. And in fact, we laid emphasis on how choppy the situation has been since the beginning of this week, as price action has been caught within a channel of the 1.06450 level and the 1.05850 area, emphasizing the indecision in this market. Though we took advantage of this buy opportunity right above the 1.06100 level on Tuesday, we are still profitable in this position, as we are currently running with about 20 pips thereabout on this one, and we have moved our stop loss to lock in some profit at break even personally. So what we are going to be doing during the New York session today is to wait out for either a breakout of the 1.06450 with buy pressure above that level to give us an opportunity to join that rally to the upside, or if a breakdown of either the 1.0600 level or the 1.05850 followed by selling pressure below the structure on our lower time frame to join that decline to the downside. So I wish we'd be prepared to take advantage of this move. I told you, whenever we have this kind of huge consolidation phase like this, from a technical standpoint, whenever the breakout happens, it's always going to be massive. So we want to be prepared to take advantage of this move when it finally happens. So these are my views here. So we were able to trade the US oil, the US tech, the USDJPY, XAUUSD, and the EURUSD for today. So like I said, let's prepare ourselves to take advantage of this move when it finally happens. And remember, whenever we have a breakout of a structure that is price action has given us a signal, we want to immediately scale down to our lower time frame. It could be your 15 minutes, your 10 minutes, your 5 minutes, your 3 minutes time frame. Just your lower time frame. Look out for retest of structure to give us a confirmation that price actually going in that direction. So on this note, I want to wish you a best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. Let's come here again to review our position so far and get prepared for the New York session tomorrow. You have a wonderful evening. Bye-bye.